And for more updates, we are now being joined by Jayant Krishna, Senior Fellow, Center for Strategic and International Studies, live from New Delhi. Welcome to the broadcast.
Pleasure.
All right, well, let's begin by asking you, is gold still a safe bet after this glittering rally?
See, if you look at the recent past, the way volatile, trends have been seen in the gold pricing, they were largely attributed to the U.S.-China trade tensions, a weaker dollar. When the dollar weakened, actually, the gold shot up, their prices shot up, and in India, especially, because of the terror attack in Kashmir, also it initially went up a bit. But then finally, now it has come down. Yesterday, it came down quite a lot. It came to almost 90,000 level for 10 grams for 22 carats and 98,000, little over 98,000 for 10 grams for 24 carats. So I think this bearish trend that we see right now is ahead of Indian festival called Akshaya Tritiya, which is round the corner, where a lot of gold buying happens. I would say, given the volatile trend which the world has seen, India has seen, I would suggest a cautious optimism, not an absolute optimism, because at the end of the day, all that glitters may not be gold.
Right, that's interesting. Now, how much gold then, as a percentage of their portfolio, should a small investor hold?
It's difficult to say, but I would believe, let's talk about two categories. You asked about small investors. Let's also talk about HNIs. HNIs would have a slightly higher appetite for gold, anywhere between 10% to 15% of their portfolio. Gold, let us understand, for small investors, it has always captivated, humans, especially the smaller investors, because of the sparkling beauty. But for them, I would not advise as big a, holding as for HNIs. For small investors, I would say 5 to 10% of their portfolio could be gold. This does not include the gold which is there for many Indians as a family jewelry and all that. That could be over and above. But as a part of, a variable holding which keeps changing depending upon the pricing, anywhere between 5 to 10% for small investors would be a worthwhile bet on gold.
Right. You talked about Indian families. This is usually a strong gold buying season for Indian households. Do you advise buying gold this time?
See, it's very difficult to say for one simple reason. If you look at the trend in the last 1 year, in last 1 year, the gold prices have increased by 26%, very, very high 26%. And if you look at the financial year 2024-25, the increase has been almost 30%. So gold, let us understand, it has always been a very good hedge against, political and economic uncertainty. As the saying goes, gold shines during uncertainty. But I would feel that even at the reduced current price level, it is not sustainable, and the shooting up of the gold prices was easily an overreaction to what's happening around the world. So I would somehow feel that I heard you when you said that JP Morgan has said the gold would cross $4,000 level, but I would believe from an Indian standpoint, I think not too much of investment in gold at this point of time at the current level, because this, as I said earlier, it is an overreaction to market trends, and this level may not be sustainable, and it is likely to fall to the best of my knowledge, my understanding.
Mm-hmm. All right, interesting. Well then, before I let you go, one last question: what's better right now, physical gold or ETF?
See, I would recommend ETF kind of, because there's exchange traded funds, some other funds like sovereign gold bonds, gold fund of funds. I would prefer that over physical gold for one simple reason, because there's no storage hassle in ETF and other bonds and so on and so forth, and also a lot of there's no security concern if you hold it in the form of these funds rather than physical gold. Purity issues, you don't face if you hold this thing. And even making charges, which are when the gold jewelry is made, becomes a negative thing in the gold holding. So I would really prefer over and above the family jewelry people have. I think any investment in the portfolio in gold should not be in physical form, but in the form of various funds, including ETF, sovereign gold bonds, fund of funds, gold fund of funds, and so on and so forth. I would prefer this vis-a-vis physical gold.
All right. Well, thank you so much for your suggestions and your perspective on the story. That was Jayant Krishna, Senior Fellow at Center of Strategic and International Studies, live from New Delhi. Thank you so much.